Hello colleagues, I am Sugatam, Product Manager for Housing Loan. I welcome you all in the product presentation. This product review presentation is basically your voice coming into the papers. We have worked out on your views, feedbacks and the market inputs. This presentation has been covered in few parts. Initially we start with voice of Mr. Chairam Sidaran welcoming you all.
Get there. As we think about it, one of the most important things that strikes me is that getting to 1000 has all been about scaling up a business model that we are already very good at. What is that business model? It's about choosing properties that are extremely valuable, builders who are reputed, LTVs that are low, and customers that are salaried and have a verifiable, strong income. That has been our business model. We have milked that business model very, very well, and we'll continue to do it. It is one of the largest parts of the business, and we'll continue to do well in that segment. However, if we have aspirations of going from 1000 crores to 1500 crores, and that's exactly what we have, then we got to go beyond this. We've got to introduce new products, new policies, new processes, and new ways of doing business. I'm excited to announce to you that we are now right in the beginning of launching those sets of products and policies. I wish you all the very best. I hope I will see the 1500 number by the time this year is out. Thank you.
Well, finally the day has come when we want to launch the new home loan product. Why we want to launch the new home loan product? So whenever we want to change the product, there are a few ideas which come to our mind, and the main idea is what is the need for changing of the product? So at present our insurance penetration is around 48-45%. We want to reach to a level of 80%, and I think with the new product changes it is possible, and we will do this. So in a gist, with the new product changes, we will be able to enhance our segments, enhance our footprint, able to focus in tier 2 and tier 3 locations equally as we are focusing in the tier 1 locations, and improve our cross-sell penetrations as well as the fee and insurance penetrations.
In the first quarter of this financial year, we decided to review the product HL. We undertook the exercise by inviting our colleagues, most of you all, from various regions. So our colleagues from audit, our colleagues from credit, our colleagues from operations, our colleagues from sales, all over the country were invited to Mumbai, where we had a session where we discussed our existing HL product. A lot of changes were suggested. Based on those changes, we proposed for a review of the product to the Change Management Committee, and we are now ready to launch the reviewed, the changed home loan product. The major changes in the product have been revision in the eligibility norms. We've done away with the IAR, the installment to income ratio, and we have simplified it by bringing in the fixed obligation income ratio. Other norms like age, work experience, revision and repayment periods have also been ensured in the product to simplify the norms. There are various surrogates which have been introduced so that we can actually enter, and I say enter, the self-employed market, because our exposure there was very low and we wanted to grow the self-employed market. We have brought in the refinance norm in the home loan product has been changed, and this will help us make better entry into the category A builders. The LTV calculation method has also undergone a change. We shall talk more about this as we go forward. We are specifically focusing on NRI customers this year, and we want to increase or rather double the business from NRI segment in home loans. With that in mind, we are focusing on NRIs. The strategy is to simplify the process and also bring in a lot of marketing activities around the NRI segment.
Surrogate loans wherein the LTV was to be restricted to 60% of the documented cost of market value. Average 6 months banking was required to be 1.5 times of the average banking. The EMI was required to be 1.6 times of the average banking. However, we have come up with another option of surrogate, wherein what we are saying is that the LTV will be restricted to 40%. However, the banking can increase to 1.2 times of the average banking of last 6 months.
Mr. Vineet has already explained you about the product basic features. I will explain you in terms of the product norms, in terms of the cost of the product. So we start with the minimum property cost. You can see that property prices have changed in metros as well as in the suburban cities. What we have done is that we have changed our existing norms and bringing a different norms into the property cost. A minimum property norm has for metro is at 15 lakhs now, and for non-metro rupees 10 lakhs under the income basis program.
Hi guys, as an NSM, I am here, and this is a challenge to accept the product as it comes, and as a leader of your team, I am not worried for product.
Happy selling. Thank you so much.